Welcome to Market View with Ike Iosa and Friends. The show that not only reveals and analyzes the inside story on today's market news, but also uncovers the areas where investors can make money right now.
Good morning. Mike Iosa, your host for my guest, my very good friend, Mr. Mark Arbeter. Hi, Mark. How are you?
I'm doing well. Thanks for having me, Ike.
My pleasure. Mark, we had the elections. They went smoothly. It's been 4 weeks since then. Market had plenty of time to digest the results. I'm curious to hear your thoughts going forward. What is your assessment of the technical condition of the market?
The technical condition remains very bullish. There are some concerns looking out, I think, into next year, but I think the market can continue to rally maybe into January. What's been amazing after the Trump bump, and then we got a couple-day slam back down, but over about the last 10 days, just look at the S&P chart. The first chart is a daily of the S&P. The price action has been extremely calm, just perfect grinding higher, right on the, very short-term moving averages. The blue dotted line is the 5 EMA, and just, perfect action. And when it's this calm, it's usually generally bullish going forward. If we go back to the July-September base that we put in, or platform, it was a V bottom with a handle, as well as a bullish continuous inverse head and shoulders. Base was about 550 points added to the top of the base, and you come up with measure move to 6,200. If you put some other Fibonacci extensions onto that, we could certainly go higher, get up to 6,500, and possibly higher than that. And when I go to the next chart, which we can jump to, chart number 2, is a weekly. We still have some room to run on the weekly before we even get to the top of the channel. Channel's probably up 6,300, but that would be looking out, a couple months. What I don't like about the weekly chart here is that we have seen, a couple bearish weekly divergences with respect to the 14-week RSI, which is on the top. Higher highs in price and then lower highs in the weekly RSI. And the same can be said for the weekly MACD on the lower panel. These are not immediate sell signals, but they are warnings that you may be, heading for some kind of top, over the next maybe 3 or 6 months. We'll see how that plays out. But certainly this is one of the things I was talking about that is somewhat worrisome from a long-term momentum standpoint. If we go to chart number 3, I have a couple sentiment charts. Chart number 3 is the name exposure index. This is a big question mark. We had gotten very bullish, or the active managers have gotten very bullish, which is quite common when you're, in a pretty calm advance. We saw that back in 2020 after the pandemic into 21, and then we've seen that in the latter second half of 23 and then into 24. But since after we peaked, or exposure peaked around July, the market has grinded higher, but the name exposure index hasn't really gotten into what we would call worrisome territory, which would be either over 100, maybe over 110%. We're sitting at around 85%. And these investors, move back and forth very quickly, and they move with prices. So it's somewhat surprising that, this index isn't above 100 or more, and in overbought territory. So this is kind of a head scratcher. If we go to chart number 4, it's another sentiment indicator. On the top, we have the 5-day CBOE equity-only put-call ratio. And as you can see over the past couple months, it's the dotted blue line. We've been in the 0.59 to 0.51 range, which is almost where we got to back in July of 2023, which was right before we had a pretty good pullback. But the second panel, we had a little lift here in the 21-day. It wasn't a sharp lift, and then the 21-day has turned over and started heading lower again, which is bullish. As long as the 21-day is going down, generally that's bullish for stocks. It's when the 21-day starts to get into an uptrend, and usually when it turns quickly. So it's like a no doubt about it. If you look at prior times that the blue line came off its bottom, it was pretty rapid. So far, even though people are playing calls on the heavy side, we're not getting a sell signal yet from the 21-day. One other sentiment indicator, which I don't have a chart for, and I get from sentimenttrader.com, is the major index combined hedger position. It's basically what the smart money is doing. It looks at the combined dollar value of hedger positions in the S&P 500, NASDAQ 100, and Dow Jones Industrial Futures contracts. And it went below the level that we saw in early 22 during the beginning of the last bear market. And it recently, early in November, it got down there. So, in some degree, the smart money is positioned quite bearishly here, and it's usually not a good idea to bet against the smart money. So it's certainly another worry here for me.
Okay. Mark, anything else you would like to add?
Yeah, this clear story, I guess, of the week, maybe last couple months, is Bitcoin. Chart number 5 is a weekly chart of Bitcoin. The top 3 panels are all money flow indicators, and you can see that most of them are up near their highs, have been rising for months. So money flow obviously going into Bitcoin, that's no surprise. We had this big breakout of this large flag on Bitcoin back in early November. We also took out the top of the range, which was up near 70,000. It's been a very smooth ride here. I did think we would pause when we got to 100,000, just because, it's a big round psychological number. But so far, even though we did pull back yesterday, it didn't close above, we've bounced back today, and it's looking like, we could finally get that close over 100,000. Surprisingly, if we go down to the lower panels, I have a chart of the U.S. dollar, and then right below that is a correlation between Bitcoin and the U.S. dollar. I made the argument for many years that the Bitcoin moves to the upside coincided with declines in the U.S. dollar. That is completely reversed. You can see in the correlation chart, now they're moving together. Dollar has started lifting in, I guess, late September. That's about when Bitcoin, was just getting started. So that negative correlation has fallen flat on its face. We'll see what it does in the future. And if we go to the last chart, chart number 6, this is a monthly chart of Bitcoin. You can see this big channel that we've been trading in. So if we were to head up to the top of the channel, we could get to, 200,000, possibly more. If you look at this base that we put in starting, latter quarter 2021, big cup and handle. So, from a longer term view, this is a very, very bullish looking chart.
Mark, thank you. Have a great weekend.
Thanks, Ike.